Hey, what is going on, my friends, and welcome back to another video on the channel. Well, of course, the goal of this channel is to maximize gains in crypto through the use of technical analysis or the exploration of new cryptos that technical analysis might just not apply to. So, of course, if that's what you're here for, you can always stay tuned on what we do update you all about and what I do post about by smashing that subscribe button and turning on all notifications so you never miss a video. But with that being said, in today's video, we are going over some ADA Cardano. We've been seeing a good little rally happen, a nice little relief rally. Of course, we did talk about that in this morning's morning market update, which in every single morning, Monday through Friday, we talk about what the crypto market's doing, the total market caps, Bitcoin dominance, Bitcoin, the DXY, and everything like that. So definitely go check that out. But in today's video, we're focusing on Cardano. Now, what we're seeing right now, again, is a nice little pullback, right? We saw a big red move yesterday in which the prices of everything were just dying. But as you can see, things are looking a little bit better, right? I mean, Bitcoins are down a little bit, but our altcoins are doing pretty well. Solana's up 3%, everything up about 1 to 2% as well. So it's nice to see a bit of a bounce here, but we need to start looking at this in terms of, is this the end of this little move down? You know, where we need to start to find some support and what the future does look like. So what we're looking at right now, of course, is that we have been comparing this move that we're seeing now to this move that we saw back here. There have been many similarities, and these similarities keep getting more and more similar. Okay, so just kind of in terms of compare the two, what we can kind of look at right now is some of those similarities to get a gauge of what we can expect going forward if it does continue to follow that similar pattern. So what we saw right here, of course, was that the price came up to set a new high off of those previous highs before starting to, of course, crash back down with one big wick. Of course, we did see that here. New all-time high came back down with this one big wick that completely extended out of the Bollinger Bands. Similarly here. Well, from there, the price, if we do zoom in a bit, on the 20 simple moving average, again, we're on the daily charts, the price came up to retest this 20 SMA before falling back down out of the Bollinger Bands. Well, just for a little bit of a comparison, we can see here that off of that big wick down, we came back up to retest that 20 SMA, we're unable to, before continuing our fall back to the downside. Now, coming off of that fall to the downside, let's get this pulled back up. There we go. Off this fall to the downside, we can see that we then had this candle. There's a pretty red candle that came out of it, but then a green candle, a big wick. So we saw a big fall, but a real big recovery. Big green candle that started outside of here, but worked its way all the way back in to start a bit of a green uptrend there. Well, coming back from here, we can see that something similar happened. We saw this big fall to the downside, extension to the outside, but a green candle that is now starting to work our way back up. Now, of course, this green candle is going to notify that we did set a lower low off of this previous wick here, but you can see similarly that we set that lower low on this green candle before working our way back up. Then we did off that big wick. Same old story. So now one thing we can also see is that in terms of the RSI, we're also seeing a similar tail play out. If we look at the area, you know, the little location of this green wick where it was on the RSI, you can see that we were coming back down to establish support right around about, let's get this perfect, around the 39 on the RSI. And on the same breath, as we can see in this first green candle outside of our Bollinger Bands, again, we are looking at a current RSI at about 39 as well. So they're very similar. Again, all of these moves that we've been seeing from both of these have pretty much run in tandem with each other. And that's the reason why in yesterday's video, I said, expect a relief rally. It's been moving so well, and it's been moving so well in comparison to that previous move that I wouldn't be surprised to see this big green candle, this big relief rally, just like we did back here. So now if we are going to see it continue to play out as we did in this box, there's 3 things that we have to do and 2 things that we can't do. So let's get into that. So the 3 things that we have to do are going to be our recovery levels. Now, our recovery levels are going to be our EMAs, our 20 simple moving average, and our Fibonacci retracement level, key area of resistance. So first and foremost, what we need to see happen is the recovery of our EMAs. Now, again, as you can see, the price has come back down to retest this 100 EMA, again, similarly as we did back here, right? Price came back down, lost it for a little bit, recovered it, started to never go back down to touch it. Right now, coming off this 100 EMA, we saw the recovery of the 50 and the 20, then the establishment of support on top of the 2 before continuing upwards. And that's what we're looking for now. That's what we absolutely want to see in order for us to be confident that we may be looking at an uptrend here. So in order for us to go back up, step number 1 is going to have to be the recovery of our 20 and our 50 EMAs right up here. We have to work our way up currently to about $2.50, but of course they are going to continue to droop down a little bit to meet us if the price does continue upwards. Now, if that was to happen, the second step in which we would need to complete, again, you guys know I like to give you all the steps, is going to be the recovery of the 20 simple moving average on the daily charts. If we do kind of look back here, again, once we were able to go up and clear those EMAs, we also established some support on top of this 20 SMA, which allowed us to carry ourselves to these new heights, to these new all-time highs. And so it will be absolutely crucial that once we come back up to retest that 20 simple moving average, that we don't hit our heads and continue downwards. Okay, we have to clear it. We have to get 2 full closes above it in order for us to complete step number 2. Now, you all do know that step number 3, the final step confirmation for an uptrend, is always, in my opinion, the clearing of the 0.786 plus either a back test of support or, of course, the clearing of that high. We have to see this 786 get cleared, though. Of course, what a 786 is going to be is our Fibonacci retracement level. So if we do get our Fibonacci's ready and we draw our high all the way from the high, or draw the top from the high that we created all the way down to the swing low, it creates this 0.618, as you can see here, to 0.786. It creates this green box that we can see here. And so once we typically will clear that 786, that is in general a very good sign that if we establish support above it, that we are going to continue back upwards. So of course, step number 3 is going to be the clearing of the 786. Now, in comparison to what we saw back here and kind of how this all played out, if we just kind of clear this up a bit, we can see that our 786, let's get this drawn up from our swing high down to our swing low. We can see that the price came back up, attempted it, came back down, established that support again on that 20 simple moving average, and then we're able to smash through it again. So even if we were to come back up here, work our way back into the zone, establish some support on that 20 SMA like this, hit our heads, come back down, one more support establishment, it could definitely happen in that fashion because, of course, this is such a key level of resistance that it's not going to be surprising to see us run into a wall once we do get up to the 786. Now, currently speaking, the price of the 786 is looking at, let's go up here, currently the 0.786 fib retracement level is about, there we go, about $2.89. So that's our final goal. We want to get above 289. And if we get above 289, I do believe that there is still a very strong chance that we will be able to see ADA go up to set new highs. Now, I know this is a lot of, if this and but that may happen, and of course a bunch of speculation, but we've seen this pattern play out fully. We have seen every single move from right here happening back here, just in a bigger time frame now. And so what I'm looking to see is that continuation. From that big move that we did see a full-blown execution of the 1.618. And so what that means for us here is that if we're able to see all of these steps be complete, we can definitely be looking at an ADA that's up to $3.96 to $4, right? We could very easily be seeing that based off what we've seen before, but we have to clear these 3 steps of support establishment on top of our EMAs, our 20 simple moving average, and then of course the clearing of $2.89 at 0.786. That's our current levels, okay? Now, can this happen? Realistically, with the market falling and everything happening out in China, can this happen? Well, based off what we're seeing again from the DXY, which we did cover this morning, I do believe it's possible. The reason I believe it's possible is because the DXY, of course, does have an inverse relationship with crypto. And when it's going down, that means that typically crypto is going up. And when it's going up, cryptos are going down. So as you can see, as it's been climbing, cryptos have been falling. Well, right now it does look to be running into a brick wall at its 786. This little line that we can see right here, this line right here, this is a brick wall. This is a 786 off of this big move right here, 0.786. Boom. You can see it creates that 786. If the price is able to clear above this and establish support, it's going to continue upwards. But right now, we tried to clear it, unable to, continuation downward. So as long as the price of the DXY does continue to run into this resistance like it is right now and doesn't come back up, boom, to clear through the 786 currently at about 93.37, I do believe it's possible. Even if we look at Bitcoin dominance, we can see that based off the EMAs that it's starting to lose a bit of momentum. You see how it started, back here, we came back up, established support pretty easy, continued upwards. Right now, it came back down, lost the 20, lost the 100, established a little bit of support on the 50, but now it's struggling to re-clear that 20. So this Bitcoin dominance, which basically just shows if Bitcoin's outperforming altcoins, and we go over all of this in the morning market update, so please check that out if you are confused. Bitcoin dominance also tells me that momentum may be slowing down here, and that we could definitely be looking at a rollover in Bitcoin dominance, which would lead to a big altcoin surge in seeing altcoins outperforming Bitcoin. So overall, this definitely does look like it can be possible. It looks like it could happen, but we definitely want to see that the price is able to continue back to the upside. Now, what we did say, what we needed to see happen in order for this uptrend to continue, the two things that absolutely must happen for this pattern to be repeating itself, we cannot lose and close below our 100 EMA currently at $2. We do not want to see a daily close there. We did not see that happen here. We don't want to see it happen here. And then lastly, we want to see on the weekly charts that we are also able to hold some support on top of that 20 EMA on the weeklies, just as we did back here. Okay, so if we lose the 20-week EMA, or if we lose the 100-day EMA, do anticipate that this pattern has now broken, and we are probably looking at some type of continuation to the downside. So overall, things are looking bullish. I'm still pretty excited about it, you know, until we start to lose these key support levels, especially a close below the 100 EMA or the loss of the 20-week EMA. I'm not too concerned. I do believe we're coming back down to set a good low to establish some support and continue upwards, just as we did here, but we definitely want to make sure that that is the case by keeping an eye on these important levels. So with that being said, of course, I will update you guys as soon as a big move does happen or anything important does happen. Of course, do stay tuned and tune in every single morning for our morning market update, where we go over the broad market, talk about what our expectations are, and much more. And of course, I do have one more video coming out today, which will be on Solana, so do stay tuned for that, and I can't wait to see you all next time. Peace.